Hello everyone, welcome to my YouTube channel. André Cardoso here. Thank you as always for being here. For today I want to share with you some of the patterns that I'm looking for inside the market. So let's start with the cable. Actually, I have a huge list to share today with you, so I have already updated some of the levels, the most important levels inside the market. So I want to share some of those possibilities or probabilities with you. Of course, my main objective here is to provide those who are learning process with some price behaviors or some patterns the market tends to produce, and I hope that helps you to understand, or at least to take some notes on how the market behaves and which patterns we can try to identify when trading the market. So some of you are already familiar with my work. I trade based on and supported by those advanced pattern formations. So I tend to search for those price zones to get a friendly risk-reward approach, and if that happens, I will try to get advantage from that specific pattern. And so last week I shared with you a couple of patterns for the cable. One of them was this, actually 2 weeks ago, this bearish shark pattern at 224% Fibonacci extension. So the pattern was projected at 41.94, and of course, as you can see here, we have a new daily fractal resistance printed right above the previous and major resistance, which we call the monthly fractal resistance right there. So we have a new daily fractal printed a few points above, of course above the completion point, or actually the completion point of the pattern. And after, as you can see, as soon the price touches the 224% Fibonacci extension level, it enters into a huge sideways moving process. So by default, that specific pattern will search for the 50% Fibonacci retracement level, this minor Fibonacci level. So this is a Fibonacci level, this red one for the pattern. So this is a specific target for the pattern completed above. So we expect at some point the market to retrace at least to the 50% Fibonacci retracement. What we can see at this point is a new fractal support below the previous lows. So we have a new lower low and the recovery of the previous support level. So we are now facing kind of, and I will show you that on a lower time frame, kind of a potential or a eventual inverted edge and shoulders right above the previous supports. If you go into a 1 hour, actually we can see that on a 2 hours time frame chart. Let me delete all those projections because I believe the market is starting to vanish with that possibility. And let me also change these options here. So we have these previous structural lows followed by a new lower low and daily fractal, or actually the most recent fractal supports. And we have already our right shoulder. So note that we are trading below that golden Fibonacci level. So this is the golden Fibonacci as resistance. So we need to trade above this level in order to confirm this price behavior as an edge and shoulders. So at least in my point of view. And some of you may be thinking, but why I'm searching for an inverted edge and shoulders after printing after a retest of the monthly fractal and the price starts to fall? And some of you may see this as a potential three-wave structure and it's not finished yet. But what I see at this point, and based on what I see, I just need to wait for a violation of the previous structure highs. A violation of the most recent resistance should trigger that pattern. I'm not saying that should trigger a rally. We have default projections for that specific pattern. Usually, as some of you already know, I use the close prices of the inverted edge and shoulders, and that points to new highs or new higher highs above the previous one. So it's not a huge projection, but it's a first step to retest the highs again of this cup after forming this handle. So all this sideways moving process that we see here, in my point of view, it's the handle being formed. So basically we have a new higher high, and then the pullback, the inverted edge and shoulders, eventually completing the handle, and that should be the first step for another retest of the previous structure highs. And if broken with a clear violation of this structure, we may see that cup and handle starting to work eventually. And for that to work, of course, at some point the market will retest the previous resistance. But that means the market needs to trade above it. It needs to come back again and reject this monthly fractal resistance, turn it into a support, and then we may see the price trading higher based on what we expect, or the default expectations for the cup and handle formation. So at some point the market will find resistance, and I'm pointing to this price level, but it can be lower or higher. But at some point I will expect, and usually I will expect that after a small period of time above the resistance, I don't want to see the price squeezing higher and then pulling back again. At that point I will try to search for another bullish pattern at some point. But what I do expect is that right above the breakout level we should see resistance, and if the market offers an opportunity to get involved once it starts to reject this monthly fractal, that can offer an opportunity to trade. So, but that is just based on the default expectations for the cup and handle, and note that the default expectations for that pattern, that can put the price trading something close to the 200% Fibonacci extension, and I believe I have already there 146.69. So this is 200% Fibonacci extension, which is my default projection for the cup and handle, which was projected initially on a higher time frame. So basically there's a lot of room above that monthly fractal, and as we can see, a bit confusing at this point. Let me try to adjust this. As we can see, we still inside this ascending wedge, and there's a lot of room to trade inside that wedge also. So I will not be surprised with that. But for now, I'm pointing to this, or the potential violation of the monthly fractal above it, or this inverted edge and shoulders. I want to see how this develops from this price zone. This is for the cable. Let's jump into euro versus dollar. Last Friday I started to project for a few dollar related pairs the crab patterns. One of them was for euro versus dollar, projected at 120.56. There's a few levels that I want to call your attention for. Let me edit this Fibonacci extension level. As you can see, this is an extension of this last swing high. So I want an extension of this swing high at in this case I was projecting to the golden Fibonacci extension, and I can edit this and push those variables. And as you can see, I have three levels in this Fibonacci configuration. Let's call it a setup. So I want to search for the 88.6, the 113% Fibonacci extension, and ultimately the golden Fibonacci extension level. So at that time I was projecting, when I started to see this shape for euro versus dollar, I started to see the potential wedge being formed, kind of a three-wave structure, kind of a third drive, and if that happens, I will pay attention to the violation of this wedge, or ultimately the price will trade even lower without forming that wedge and will be pushed to the golden Fibonacci extension. And that was my expectation based on the strength of the most recent market behavior with those strong candles there. I was expecting some, and note that we are already trading oversold, but I was expecting at some point a formation. So I was saying to myself, okay, if I see one approach to the 38% Fibonacci retracement, which will converge with the formation of this bullish scrap pattern, I will try to take advantage of this opportunity. And that opportunity can happen even with that bounce from this fractal support, now the most recent one. That can happen if the price decides to respect this structure, actually the previous structure highs, and if the price decides to fall from there and approaches these levels, I will try to take that opportunity. But at this point, I don't know if that will happen. But let me call again your attention to those three Fibonacci levels that I searched for. And let me delete this, not this one, but just the Fibonacci level here. So at some point when the price approaches these levels here, we can see these as, I can search for two different, or at least three different Fibonacci levels. One of them, the 88.6, which I saw the price not respecting that level and threatening immediately the previous lows. The 113% Fibonacci extension, and then the golden Fibonacci extension below. And as I said, I was projecting the golden Fibonacci extension as the crab pattern. And what happens, and sometimes will happen, sometimes we are expecting a deeper fall to form a specific pattern and the market forms another one. But what happens at this point is the market finds support at the 113% Fibonacci extension level and starts to bounce. So basically forming the alt-bat pattern. And that being said, the market is already trading, I believe, the 50%, or at least close to that level. 50% Fibonacci retracement level. So, as I said before, it can happen if the price decides to respect these previous structural lows or highs. In fact, if the price decides to respect, let's tag this with the price. If the price respects 122.18 and starts to fall again to this Fibonacci level, or let's say to this convergence between the 38% Fibonacci and the golden Fibonacci extension levels, that will call my attention to this price zone. Let's see if that will happen. That's still one of the possibilities. But as I said before, the cable threatening with the inverted edge and shoulders, which means more bearish for the Dixie, or which may produce more bearish momentum also for the Dixie, or will suggest that, which means euro versus dollar may trade higher from this territory without breaking the most recent lows. Australian dollar, another one, and this one we shorted this one. I'm not sure if you remember on my last video I called your attention to the possible or the potential violation of this fractal support as a next zone for these blue minor heads and shoulders, and as you can see, we entered that trade expecting the price to keep falling, then NFP of course triggering this this rejection and printing this daily fractal, now the daily fractal support level. As you can see, the price also respecting the 113% Fibonacci extension level and offering this bullish momentum, or the most recent one at least, for Aussie. That doesn't invalidate the possibility to trade even lower. Of course, at this point I need to see the price, of course, a violation of the daily resistance 77.95, that will suggest a retest of the previous highs, and we have there the weekly fractal, and of course a violation of that fractal, that major fractal will or that may suggest more upside, since it will also break this kind of a triangle formation at this point if the price decides to form this support level, or if the price decides to hold above this fractal zone. That's, well, let's see how the price will behave as soon as we approach the daily resistance. If that happens, it's still possible to trade this edge and shoulders formation, but at this point you need to wait after this clear rejection of let's say the clear recovery of the weekly support, which was printed at the beginning of this month, or last month actually, May. So basically the recovery of that weekly fractal support. Let's see how the market will trade from here. The Kiwi, as I shared before, it has offered a nice run after printing these bearish 2618 trade setup. So we shorted this golden Fibonacci retracement level after support, a price trying to recover back to the previous structure support level and to the golden Fibonacci retracement, completing the sequence, completing the 2618 trade setup. So basically we target one symmetrical pattern, or one symmetrical projections. Actually my projection was initially at 71.84, my first target, and then I target the close price of the structure, the previous lows. As we can see, the price also filling our our default target. I'm sorry. So as we can see, another 113% Fibonacci extension, perfect bullish alt-bat pattern, also for the Kiwi, very similar as for the Aussie, euro versus dollar, and also the cable. Australian dollar versus the New Zealand inside this channel. At least for now, I don't want to mess with this one. I have nothing to say. I projected before, and I believe I shared this one with you before. The 78.6 projected at 108.74, so the 78.6 from the monthly fractal resistance to the weekly support. So until there, I will not mess with this one. So I need to wait for this price zone, to one approach to this price zone. Dollar versus CHF, inside what we may think it's at least for now kind of a parallel channel. So I draw this as kind of a parallel structure. It can change, it has changed a lot during last months. So let's see how the price reacts from here. But at least for now, it's very tricky to try an involvement on this one. I still waiting for this major Fibonacci level to be reached. So let's see. At least for me, this is kind of a correction. It doesn't look like an impulsive momentum, so some strong moves, but on both ways. So let's wait. I will wait for 88.91, or one approach to this price zone, which suggests a violation of the current ascending structure. The Canadian dollar, very much the same. I will wait for the violation of the recent structure. Let me show you this on a higher time frame. because I'm also waiting for a deeper move towards 118.90. So this is the golden Fibonacci extension of this last swing high. So I want to see if the price decides to approach that level. On a lower time frame, this is a 1 hour time frame. Last Friday I projected the bearish crab pattern also, 121.90 golden Fibonacci extension. When I start to see the price approaching the previous structure highs, well, everything is possible, and as we can see, the 113% Fibonacci right above the recent or the most recent fractal resistance, 121.35, 121.33. This was the resistance. So we have, as I said before, the bearish alt path pattern, then we have the alt path pattern extended at 113% Fibonacci extension, and ultimately the price will extend to the golden Fibonacci above. So as you can see, the price failing the completion point just by a couple of points, or failing the alt path pattern just by a couple of points. But we have here one previous example where the price fills all the variables and completing the pattern and actually giving access to this momentum. Norwegian krone nailing the 113% Fibonacci extension. Another example, I shared it today on my Twitter. One note from Evernote that I used to create some documents. So, and I created some not a report from last week, but a couple of charts with patterns formed last week after NFP last Friday. So if you are learning process, I believe it's a good example of some of those patterns forming, even with some data being released at that time. So this was one of the examples, the Norwegian krone finding resistance at the 113% Fibonacci extension, also giving access to this strong bearish swing. Very much the same for Mexican peso, much stronger than the krone, but this one failing also the golden Fibonacci extension. So I projected this as a bearish shark, the bearish crab pattern, another one at the golden Fibonacci extension level 2022, and we have the price finding resistance 2021. So clear bearish momentum. I'm waiting to see what will happen as soon the price approaches 1944, 1947. So that's my range to pay attention for potential involvement for the Mexican peso. Let's see. Dollar versus the yen. Another one, 113% Fibonacci extension. I projected this one at 110.42. So this was the bearish Gartley pattern that I was expecting on a higher time frame, and suddenly the market finds resistance at the 113% Fibonacci extension and providing these strong, similar to other dollar-related pairs, strong momentum. Euro versus the yen, another one that we're still shorting based on this higher time frame bearish crab pattern, actually bearish shark pattern at 224% Fibonacci extension. So of course this is pure speculation. I don't know what will happen. This is what I need to happen. This is what I want the market to offer me. Even with all those swings, I need to see the price trading this monthly fractal again. But of course this is pure speculation. The market can fail me and trade above my entry level and start to threat my limits, and that will put me in a dangerous situation. So basically I always suggest, if you trade on a higher time frames, I always suggest to try, and specifically if you trade against a trend, try to minimize your losses, adjusting your initial position size and that was my suggestion with my subscribers. Try to minimize your losses, try to decrease your initial position size. If you trade 2 lots, minimize that to 1 lot or even below that. Trade below your usual volume if necessary, and try to get advantage from these opportunities. So this is the bearish sharp pattern on a daily for euro versus dollar, so we are trying to take advantage from that one. Pound versus the yen, of course we have patterns projected above, also the bearish scrap pattern. Let's go into a 1 hour time frame and look at the ones printed here. So bearish sharp pattern projected to 155.63. So this is a 224% Fibonacci extension of this swing low, completing the pattern. As you can see, as soon the price achieves this level, it starts to fall. I projected this potential trend line support right there above the previous structure resistance as potential pressure element. The market finds support right at this trend line and then finds resistance at this trend line. Resistance that I draw here as an imaginary trend line. I didn't know the market will trade in that, will fill those expectations, but it seems like we are inside kind of a descending wedge. Some of you may call it a megaphone formation. We are already trading below the previous structure highs or previous structure lows. I will not be surprised to see one attempt of a recovery from this price zone. Let's see how the price will behave. Of course, this bearish crab pattern, this minor red pattern, already trading the default target zone, which is this 50% Fibonacci retracement level right here. We have the default target for that pattern already reached. So, but we have also a major target for this one. So this, let's change this color, this blue shark pattern. Usually the pattern will search also for the 50% Fibonacci retracement, and in fact the default target for the crab pattern, as some of you already know, it's a 38% Fib and not the 50%. So we are already trading the 50%, but the market already target the default target zone. So 50% Fibonacci retracement, this is the default target for this major shark pattern, but let's observe how the market will react. Let's see how the market will react from there. Australian dollar versus the yen, another one that finds support a few points below the gold, the 113% Fibonacci extension, another one that I was expecting a deeper pullback, kind of a convergence with this 88.6% Fibonacci retracement level, and the price fails that expectation, finding support right below the, let's say between those ranges, or in between this range between the 113 and the golden Fibonacci extension level, which is always unfriendly to get involved, because you don't know if the market will keep falling or if it will bounce from the middle of the range. We don't know what will happen, but you need to rely on one of those levels. And when I saw this structure, I started to project this bullish scrap pattern eventually for an involvement with that convergence with the 88.6, and if that happens, rejecting the weekly fractal support, that may offer a nice opportunity. But the market fails my expectation, as you can see, finding kind of a support there and clear bounce right after the non-farm payroll last Friday. New Zealand versus the yen, nothing to say. We have a clear consolidation here. We need to wait what we'll see, what will happen, and nothing to, actually, at least for now, nothing to say. On a higher time frame, I was, and I still projecting this bearish sharp pattern at the golden Fibonacci level. We have multiple patterns projected above, let's say above 81.32. So let's see how the market will react. Of course, I admit, if the price violates the most recent support level, which will converge or which may converge with the violation with this trend line support also, that should trigger downside momentum, or at least a retest of the weekly fractal below. But I'm pointing until the market starts to trade close to this price zone. I will that's not paying my attention at this point, not calling my attention at this point. The Canadian dollar versus the yen, the same thing. We have a bearish crab pattern projected at 91.50, so until there I want to wait. But on a lower time frame, if you go into a 2 hours time frame, I believe the market is now triggering what we may consider one edge and shoulders. The problem with these edge and shoulders is the default projection for that pattern. It's right below the next zone. So we have the next zone right there, previous structure support. It's 35 points below the next. So I believe the market may find some support right below. It may act as a reversal after this bullish momentum, and it can offer a deeper retracement or a deeper pullback. But my default target points to the 200% Fibonacci extension 90.16, which will converge with this golden Fibonacci extension level, and that is a deep crab pattern completion point. So that being said, instead of searching for a short at this point, some of you may be interested to search for more upside, and if that is the case, I believe this should be a zone of interest for some of you. 1916, so this is the bullish crab pattern completion point. Of course, it can also fail, as I said before, that edge and shoulders can act as a reversal or as a major as a trigger for a major or deeper pullback. But the most recent price behavior, and taking into consideration those Fibonacci ratios and variables that I search for to identify those patterns, this will complete also the bullish crab pattern, and we should pay attention to that possibility. Now, as I said before, if this one will offer me this kind of a rally, I don't know, but at least if that happens, that will put the price trading my major golden Fibonacci right there. So I just need a new higher high to complete that major daily bearish crab pattern. Okay, so a new higher high will complete that pattern for me, and that's what I'm waiting to happen. But it can fail if the price, of course, decides to trade even lower. But let's pay attention to this price, and even if you don't want to get involved, which is not my objective here, let's observe how the market will react from this price zone if reached. Euro versus the pound. 1 hour time frame chart. I was not expecting this one. Also a deeper, again, the three levels that I searched for, the 88.6, 113 and golden Fibonacci extension, and eventually the market will feel pressure on all of those levels. As we can see, the market has found some pressure as soon as it touches the 88.6. It has found some pressure after touching the 113% Fibonacci extension level. This one a bit below the completion point, and then we have the golden Fibonacci extension level, which will not form the most clear pattern, but it's not the first time the market of course, we need to wait for the violation of these lows. But if that happens, that will not be a surprise for me to see the price touching the golden Fibonacci and finding some support very similar to the previous Fibonacci levels, and at some point offering some more, offering a bounce, let's say. We never know if the market will rally or if it will reverse, or if it's only a smaller or a small bounce from the lows. Let's wait and see. What can happen from here is very similar as the pound or for the cable. This may act as a right shoulder right here. If that happens, actually we need to wait, of course, for the violation. I'm pointing to the most recent fractal resistance. A violation of the fractal resistance may offer more upside, but this can happen if the price decides to start to bounce from here. This is, of course, a visual event, a visual pattern. We don't need any tool to identify those patterns, but it may act as also as a potential inverted edge and shoulders if there's a violation of the most recent resistance. I believe that should trigger more upside or at least it will target. I will target the default, and we have already the structure printed, so we can already identify those levels. So that inverted edge and shoulders may point to the previous structure highs, the daily fractal. Nothing more than that. I'm not expecting that inverted edge and shoulders to target the weekly fractal above. Okay, I target based on the default expectations, and I create my limits based on those target zones. So if I'm expecting to see something like 30 points or 25 points above the resistance, that's my limit as a one-to-one risk reward. If I want to use a one-to-one risk reward approach, that's my limits for this setup specifically. Euro versus pound. Euro versus Australian dollar, huge fall from this structure printed above. Also another sharp pattern printed at 224% Fibonacci extension. Nice reaction immediately after completing the pattern, but then a huge sideways consolidation period inside this structure, and as soon the price violates this structure, as you can see, and I believe the price, actually we are now threatening the previous weekly fractal resistance, so a violation of this weekly fractal, or a recovery of this weekly fractal resistance, of course should trigger more downside. At some point I was expecting at least a 50% Fibonacci the Fibonacci retracement level. This is the default target for the sharp pattern, which still has a valid expectation, since the market, as soon as it completes the pattern, enters into a consolidation period. So we don't know which pattern the market will form during this process, this sideways moving process. In this case, it was a descending wedge. It can print a small flag or a small triangle there, and then or a smaller wedge, and it can target the default Fibonacci level. This wasn't the case. This was a case where the price took a lot of time inside this process, but at some point, as soon the price violates these lows or these trendline support, I started to expect, okay, eventually the market will fall from the weekly fractal, and we'll find the 50% Fibonacci retracement, even though. So, but let's see how it will react. We have also new structure here that we can use to identify or to search for at least a golden Fibonacci extension level. Let's see if we find some convergence. It's very possible to see this as a potential bullish shark pattern at the golden Fibonacci. We have these lows right there, and actually these ones. Let me remove the magnet because I can't point to. Yeah, there's a potential bullish shark pattern for euro versus the Australian dollar. We are trading already extremely oversold, so I will not be surprised to see some pressure at this price. And let's put some Fibonacci levels here between 38% Fibonacci retracement level, the 50% Fibonacci from the weekly support to the daily fractal resistance. So it's possible to see, let's create kind of a cluster box right there between, right below the weekly fractal, 156.49 and 156.23. So that's the range for that cluster, the convergence between those Fibonacci levels. Let's see how the market will react there, but it's a nice opportunity there. Previous structure resistance, let's see how the market will react. And something is missing here, of course, my 200 moving average on all my charts, missing all that moving average. Euro versus the New Zealand. This one, we took this short from these highs from 169.71, expecting at least a 38% Fibonacci to be reached at 168.88. So this was our short, and we are already approaching the golden Fibonacci retracement level. So our second target, we will start to trail this position from this price zone. Let's see how it will develop, but as you can see, very productive, the euro versus the New Zealand, forming the bullish cipher pattern. I projected this pattern as soon the price starts to fall with these strong candles there, and the market forcing a retest of the previous highs, in fact. And then the bearish alt-bat pattern that I shared among my subscribers with this short, expecting, as I said, both of those levels to be reached. Pound versus the Australian dollar. We have, on a higher time frame, I projected this kind of three drives, and the market being pushed to a new higher high above this structure. So I projected this as the first high, the second high, and the third one, forming the third drive, and I was expecting at least a retest of the bottom of the structure. The market has failed that expectation, as you can see, and as soon as the market finds support, forcing a retest, and in fact closing above the previous structure highs. On a lower time frame, you can see also the 113% Fibonacci extension being used as a pressure element of resistance with the bearish, and this one a bit tricky to identify, but a bearish alt-bat pattern right there, and forcing another pullback. The pound versus the New Zealand, another one that I projected at the 127% Fibonacci extension, so I wasn't expecting a threat, or at least I can expect a threat of the previous structure highs and starting point of the pattern, but I wasn't expecting new highs above it. But as you can see, just by a few points, the market printing this technical double top right there, and immediately validating that double top with a violation of this support level with the next zone, and already trading the default target for that double top. But at some point it was expected based on the bearish, or the potential bearish Gartley pattern that I projected below the previous highs, And of course, if you put some Fibonacci retracement levels, as you can see, we are already trading the 38% Fibonacci retracement level, which is the default target for the pattern, which still valid. As some of you already know, when you short the BAT pattern or the Gartley or the cipher pattern, all those three patterns needs to respect the previous structure highs. So it can trade this price zone, but it needs to respect it. So it needs to print something like this, a double top or kind of a clear pin bar rejecting these previous structure highs. If that happens, that the pattern still valid. So which means when we enter these trades, we need to understand the market can threat the previous highs, and we need to provide some room above these the starting point of the pattern to allow the price to threat those levels if necessary. So you need to allow and to position your stops a few points above. So usually and by default we use the magnitude of our, let's say, our default targets or default projections for our targets, and we can use kind of a one-to-one risk reward above our entry, of course, to identify our limits in these cases. Most of the Gartley and the cipher patterns will force us to use a one-to-one risk reward approach, and if somehow the price didn't offer you that opportunity, you need to avoid that trade. Let's plot this one and let's use this example to identify those limits and those target zones. So let's delete all those levels here. Let me delete all these levels that we don't need. So let's imagine we are trading our completion points, and in fact let's push a bit back, a little bit, no, not there, I need it kind of here. Okay, so we projected our Gartley pattern. We know the pattern will complete a 127% Fibonacci extension. We are assuming this shape and this price behavior as a potential Gartley pattern. So we say if the pattern completes, we will target the default target, the 38% Fibonacci extension level. So this is my default target zone, which means if I enter the market at this price zone, I only have 136 points as targets. So in that, the question starts to rise from here. So where I put my stops, I need to respect the previous structure high. So I know that I need to put my stops above 95 points because the market can threat these levels again. So, and I know that I can use a maximum of one-to-one risk reward. So that means 136 points. As we can see, we have that monthly and weekly fractal resistance right there. So this was, before you enter the trade, this is the exercise that you need to do. So I need to enter the market at a specific price zone, and I point to, let's say, 196.85. I have a default target projected at 195.49, and my stops will be positioned at the maximum of a one-to-one risk reward approach, because I need to respect the starting point of the pattern, and that will force me into a one-to-one risk reward. So that will point to 198.20, which will respect the previous weekly, and monthly fractal format above. So let's see how the price reacts from here. So we see a violation of our entry zone. Let's pause the market there, because at some point our targets are not positioned there anymore. So we need to adjust our targets to these highs. The market is already trading these levels, so we need to adjust. So which means our initial target is not so friendly anymore. When you use a one-to-one risk reward, and if the market trades against you, of course, your reward will not be the same unless you trade specific price zones based on price structure. If you don't trade the Fibonacci levels, if you trade based on the structure highs and lows, eventually you can manage to take advantage of that. But I trade based on the Fibonacci retracement levels because I know the price tends to search for those levels and tends to find some pressure at those Fibonacci levels also. So as you can see, using a one-to-one risk reward approach, and if the price decides to trade against you, our initial reward is not so friendly anymore. So which means from initial 136 points, we are now targeting for 75 or 78 points. This is my targets. Let's see if the market respects our stops and if at some points decides to trade our levels. This is the current price zone. This is the current live charts for the pair. So as we can see, we are trading that 38% Fibonacci retracement, which I showed you before initially. We are already trading the default target for that pattern. So which doesn't mean the market will trade even lower, but we are trading the default 38%, the minimum expectation. So at this point, what I need to do is to adjust my stops to break even. And at this point, I have no risk involved in this setup anymore. First of all, because initially the market trades against me, it threats the invalidation of the pattern, and in this case, because it's a Gartley pattern with a lot of room above my entry zone, it offers me just a couple or almost half of my initial reward. So I need to adjust my stops, and it's as soon the price touches the 38% fib, I will do that exactly. I will move my stops to my entry point, and if the price decides to trade the second target to the golden fib, so that may help me to maximize my this trade specifically. But it's important, the most important criteria that I use on my trading strategy is exactly this, because this will vanish with any kind of emotional reaction that we should take during the trade. If the price takes too long, if the price decides to trade against you another time, a bounce from these levels and threatening your entry again and threatening your stops, it's completely avoidable. So we need to avoid all those potential elements which will mix and mess with our emotional behavior inside the market, and we need tools to do that. And the tools that I use to avoid emotional reactions inside the market, because I'm a human, I'm not a machine. I trade based on what I see. I don't use, as I said before, I don't use any type of algorithm or any software to identify those patterns as you should see a lot of people using. I always trade based on what I see, and I don't use any type of external tools to try to identify or to plot those patterns. So that being said, I prefer to search for tools with those patterns, which those patterns provide me, in fact, to avoid all those mistakes that we tend to do inside the market and trading the market. And to do that, I need tools, and those tools will help me a lot. Specifically this one, this criteria that I use to break even my trade as soon as I reach my default first targets. Of course, I also use a partitioning strategy, and some of you may do the same, and some of you may not. But I use a partitioning system where as soon as the price touches my first target, I start to close my position size. Usually half of my initial position size is closed at the 38% Fibonacci retracement level, which means if I short 2 lots from my entry zone, I will close 1 lot after reaching my default target, and then I will close another portion at the golden Fibonacci retracement level. And if the price keeps trading in my direction, I will trail that position after closing another portion. I will trail that position with a trailing or an automatic or dynamic trailing stop. For now, we're still trading the first target zone for that Gartley pattern. Let's call it a Gartley pattern. Okay, so this is just one example of what I tend to share among my subscribers: an entry point, a target zone, a stop or limit zone for our stops, and the partitioning system and strategy, and the break even as soon as we target our first target zone. So let's move forward. That's just one example of what I tend to do. This is the Dixie. The Dixie also projected before. I was expecting more bullish momentum for the Dixie. I was expecting the bearish crab pattern at 1992, and as you can see, another one, 113% Fibonacci extension, NFP, and the price sinking immediately back to this trend line resistance again, and the 200 moving average. Let's see how the Dixie will react from here. Gold, we're still holding this position. Nice entry for gold, printing the bullish crab pattern at the golden Fibonacci extension, and then reinforcing that pattern with the inverted head and shoulders. So we took advantage of the inverted head and shoulders with my first target projected at the golden fib and previous structural lows, previous structural support. It's now the most recent fractal resistance at 1896. I have a second target for gold, of course, retest of the previous highs and eventually new highs. Let's see what will happen from here. Silver, it has found support also at that 113% Fibonacci extension. I was expecting, and it's still possible to see, and if that happens, attention, because if silver finds a way to trade at these levels again, we may see also gold at least approaching the previous structural lows. We need to pay attention to these longs on gold. Silver, as I projected before, bearish sharp pattern at 28.41, nice fall, but not trading. Let me show you this in a 2 hours, but I'm still waiting for the 38% Fibonacci retracement level at least. Of course, because the market has found nice support there, it's also possible for that to not happen. Let's see if that happens. What will happen from here? But basically, if that happens, I will see the gold also approaching, at least one attempt for gold to approach the previous lows, and I don't want to see that at this point. But well, it's also possible to see, let me try to show you that. We can see gold, let me show you this using kind of a parallel channel. During this period of on gold, during this period on gold, we had silver printing this pushing lower. You know, you have this swing high and silver pushing lower during that shining channel on gold. So I will not be surprised to see, let's say, gold trying to find some, or entering into a consolidation process, kind of another parallel structure here, and silver being pushed even lower during that time. But I don't want to see gold trading below the most recent lows, while I can see silver trading below the previous structural lows. And if that happens, that will put the price trading not only the 38% Fibonacci retracement level, which is the minimum target for this shark pattern printed above, but also it may also print a bullish crab pattern below, or below the 38% Fibonacci. So for now I'm pointing to 26.86 for silver. Of course it can fail, we need to wait, but that's my expectations for silver, which is, I believe it will be more heavy than gold. At least that's what I expect. Gold, it has synced immediately, fast, and it has clearly printed almost a V-shaped recovery with supported by that inverted head and shoulders. So I have a clear reversal behavior here for gold, but I don't have it for silver. So I'm still waiting for silver to produce that. Let's see what will happen. As I used to say, let's see what will happen. Most of the times we'll spend the time waiting. Crude oil, I shared this one with my subscribers, the violation of this wedge and triggering these inverted edge and shoulders. So we're still holding these longs for crude oil, and very much similar for SPX 500. We took advantage also from these inverted edge and shoulders. The price already retested again that next zone, so we're still holding these longs for SPX 500, which is now threatening the daily fractal resistance. Let's see what will happen here. We have clear bearish divergence here for SPX 500, but a lot of room yet. Let's see. We have a bearish crab pattern projected at 42.48, a minor crab pattern projected at the top of this kind of a megaphone formation, so this ascending trend line resistance. So there is a crab pattern pointing to that trend line, and to finish with the Dixie, with the DAX, not the Dixie, with the DAX. I projected this one before, 15,763, the DAX bearish crab pattern. We have a minor crab pattern, this gray one, projected at the golden Fibonacci extension level, and we have also some convergence here with the major bearish shark pattern, also projected at the same price zone. So let's wait to see also for the DAX what will happen as soon as we enter this price zone. Of course, if the price decides to invalidate that pattern, we may see more upside for the DAX. Let me also show you this trend line resistance, which may put some pressure for the DAX at this price zone. So let's wait and see more developments, and I will try to share some of those further this week, and let's see what the market will offer us for this trading week. At least for now, this is what I have for you. I hope you enjoy these, or at least some of those patterns. I hope you take some useful information, and I hope to see you here the next time. Well, all the best for you and for your families as always, and have a nice trading week, everyone. Thank you again for being here, and don't forget, if you enjoyed this video, press that like button. It's always important for me to get that feedback, and of course I don't need to call your subscription, because if you want to get involved with these Harmonic patterns, and if you want to learn more, you should press that subscription button also, in order to get the notifications once I share some videos here. So again, I hope you have a nice trading week, and for those who are learning, keep that journey, discipline and motivation to learn those processes, and all the best for you. See you next time.